Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly, will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. It's been an interesting week. Started off, market dropped off quite a bit, actually during the middle of the week, but then it bounced back up on Friday, so it's okay. Still down a little bit, I think. Let's see here, from the beginning of the week. Yeah, actually it's about 2.82%. That's one of the things that I think is the hardest to deal with when you're investing, especially when you get to retirement age and you've got a retirement plan in, you know how much income you need, how much you're going to be taking out. Oftentimes, I think people think that there's a super top secret portfolio that you can invest in that won't give you a lot of volatility when you get to retirement age, but it's still going to give you all the return. And I'm still looking for that one. Yeah, it's only been 30 years now. But anyway, there are different funds that will do different things at different times depending on they call them algorithms. Basically, the mathematical formulas they use to select stocks, and it's kind of common sense. And something else is, over the years, I watch and I build models continuously, and I keep track with what's doing the best at any given time. For example, I took all the stock in the United States. I run this screen every day, by the way. So all the stocks in the United States that have a market value above $300 million. Okay, $300 million is considered super small now, but I use it anyway. I'm getting some stocks in there that probably not, that are looked over by most mutual funds. I just like to include them in this so that I can keep my finger on the pulse of the stock. And I rank them by a relative strength. That basically you're comparing how well they've done over the last 6 months. And I look for those that are making a new 30-day high. Those are 30 trading days. That's about 6 weeks. And I like the price over $5 because a lot of super small companies that big mutual funds will not invest in. Most mutual funds will, just the big one. So try to keep my eye on those that are more in the sight of various large funds out there, because they're the ones that control the overall direction of the market in general. So I run that every day. It's actually running all day, every day. And if you ever want to see that, just you can call in and set up an appointment. I can show that to you, no problem. It's probably not going to be a ton of help to you until you've been doing it for a long time. I've been doing this for decades. Just an indicator. It's not something that you can actually rely on like a seesaw. Seesaw, you get on one side, the other side goes up. You get off that side, and if there's anybody on the other side, it comes crashing down. That's pretty normal, but it doesn't work like that. It just gives you an idea of how strong or weak the markets are at this point in time. They can change on a dime, and they do. They change all the time. And one of the things I like to see is what are the stocks, how many of these stocks are coming up. A strong market is going to have somewhere around 150 or so. That's a really strong market. On Friday, there were 30. So that's not bad. I mean, I've seen days where there were none. There weren't any stocks that were making a new 30-day high that had an increase in share volume and had been in the top 20% of all stocks over the last 6 months. That's the full scan that I use. And again, it's just to show me how strong or weak the market might be. And right now, it's pretty normal, actually, especially for this time of year. In the latter few weeks of the year, it slowed down. The last 2 weeks can be very volatile. Depends on what's happened during that year. News has a big impact on it too, but you want to have a fairly decent, and when I say decent, I mean the probability of this helping your investing is probably 35% or so, which means only 1 out of 3 times does it ever help a lot. But that's better than 0. And you want to watch the market over the last couple of weeks if you're thinking about making trades or making some new investments. It might be something to take a look at. Not that it's really going to matter all that much in the long run. In the long run, what really matters most is how fast is the company growing its revenue, and is it profitable? Those are the 2 main driving factors. And there are funds out there now that which didn't exist up until a few years ago. I was shocked. But there are funds that are there now, and most of them have been around for less than a decade, which means they're relatively new in the fund world. And they've got good track records. I mean, exactly what you would have thought they would have done. So, and if I'm going to do individual stocks, I've been talking about this for a while, and the software has grown way more complicated than it was the last time I did this a few years ago. But building models based on size, speed, and profitability is it's a major task. I mean, they've added so much data. Not that it helps, but you have to deal with it. And so anyway, that's going to be a while. I mean, it's probably 3 to 4 months minimally. I think maybe if I'm lucky, maybe 2 months. But anyway, and it's just to be able to do something. I think that a lot of the funds that are out there right now, if you know how to read a prospectus and you take the time to do it, and you really try to understand it, meaning you're putting a whole lot of effort in, I think there's some really good opportunities out there for people that are long-term investors. The risk with a big risk for stock markets, if you're over the age of 60, one of the biggest risks with the stock market is it is not undervalued. So if it were undervalued, and that's when nobody wants to buy it. But if the market was selling lower than it should be, like it was back in 2022, can't believe that's been 2 years ago already. But it was down a lot. Nobody wanted to hear much about it. That's one of the reasons I still have a job. Despite all the robo-brokers that are out there, and you could take what I'm doing and write a program and put it in the market. Say, okay, now just do that. And there are tons of them out there. There are a lot of really good ones out there. I'm impressed with that. But the ones that are better and have had better, longer track records, quite frankly, a lot of them haven't been around that long. I thought this whole industry was going to grow way faster than it grew. And most of the people in my industry are kind of struggling to keep up with the growth that we have had. at the various options that are available. And I was waiting for it. Not that I really didn't know it was going to happen the way that it did. I thought it would happen much sooner, and it actually didn't start happening for the first 10 years that I had left. I left my firm 10 years early before that they actually started really developing a lot of things that you see available today. And I like it. They're coming around. If you like individual stocks, working on stuff that it's probably going to take another 2 minutes, and also reached out to some institutional money managers that I've been impressed with. So we're in talks now to be able to make that available. I'll be able to make some institutional money managers that normally aren't available to the general public. And that one will actually come a little bit quicker than my own model. So just keep you up to date. I'm, markets never sit still. They're always developing, always changes, new opportunities. Sometimes stuff that you were doing is not as good, but never stagnant, that's for sure. You can't get bored doing what I'm doing. Actually, it's pretty exciting in a lot of times, especially when you know what works. And if you ever, I've got to get I got this book. It's a big book. This guy, then I have to go dig it out. It's probably 10, 15 years old. There are two versions of it. He back tested all kinds of models that you could use for your investment. And this is getting kind of boring for a lot of people. But anyway, I'll bring the book in with me when I do my show next weekend, and we'll go through some of this stuff on there too. Because when you're out there picking funds, it's really good to know that. I wouldn't allow anybody to pick their own funds unless they pass the test. You got to pass the test to drive a car, and why shouldn't you have to pass the test to manage money, even if it is your own money? Yeah, but I know that's real popular, but it would create a whole new field that they would add. I would add it in probably the 10th grade in high school, because by that time you know all the math that it's necessary to know to be able to do it. The investment side of your life, and but there are tons of definitions. There are tons of, there are literally, I don't know what my database has in it anymore. I've got this database from Morningstar. It's got thousands upon thousands of funds. When you add in mutual funds, exchange traded funds, stocks in, it's literally 60 or 70,000 certificates or different types of investments out there. So, but it's a lot. It's actually significantly higher than it was when I was coming up through the system. But it's a lot easier to keep up with if you already know. And if you know, as an example, there was the fund, I'm not even sure if this one still exists, but the sales and profits had to be up over the past 5 years. So they had to be higher than they were 5 years ago. And they took all those companies and separated them from the market. And then they said, okay, now the dividend's got to go up the last 5 years in a row. And that fund, it's probably still out there. I haven't used it for a long time. But I like the idea. When it was in, it did reasonably well, still did reasonably well. But there are others that have some other safeguards in there, and that I like a lot more, I like a lot better. And, that's great. I feel like we have everything we need to be able to help most people reach their financial goals. And one of the hardest things to do, I think, is the plan itself. And the reason I think it's so hard is when I'm reading all my financial planning material, all the magazines, the subscriptions I get, the online stuff, make it so complicated. And I don't know if it's just, there's always been personality types out there who love to add detail. And I was not one of those. I was one of the, hey, look, you need to add everything. You need to know about everything that could have a substantial impact on your plan. But let's leave out anything that's not important. And like that makes me very much different from the people in my field because they just love complication and I love simplification. So anyway, that's one of the things I like about annuities. Some people have got upset with me and sent some questioning emails. By the way, you can reach me at bill@bullingtoncapital.com if you have any questions. But I got these emails like, why are you talking about these things? We don't want to know about them. And I'm like, well, because they're important. Because most people can't afford to have 100% of their money in stocks because the stock market can go down like it did from 2000. In March of 2000 to March of 2003, it was down over 50%. And it didn't have a rally of more than 30%. It was over 20 a couple times, which got everybody excited right before it turned down and went lower than it did the last time that it had crashed. So that whole crashing event took 3 years. And can you imagine he retired? That's by the way, this is why I'm not retiring, because that's my luck. The market's going to start declining the minute I retire. So I'm planning for that ahead of time. When we come back to these commercial messages, I'll tell you how. Bill Bullington right here on 1420. Stay tuned.
It's beginning to look a lot like Christmas everywhere you go. Take a look at the 5 and 10, glistening once again, with candy canes and silver lanes aglow.
Plumbity plum, ka-dee-ka-da, it's why it works the plumbers. Plumbity plum, ka-dee-ka-da, with Cleveland Christmas wishes. Wa-la-la, wallaka-doodle with us. Wa-la-la, wallaka-doodle with us.
Hey! Now Santa's got his flying deer in old-time Christmas magic.
But when his plumbing goes kaput and things look kind of tragic,
he picks up the phone and makes the call. Now there's Christmas cheer.
Considers it done and has his fun. Wallaka-doodles with us.
Ho!
Plumbity plum, ka-dee-ka-da, it's why it works the plumbers.
Whoa!
Plumbity plum, ka-dee-ka-da, with Cleveland Christmas wishes. Wa-la-la, wallaka-doodle with us. Wa-la-la, wallaka-doodle with us.
Merry Christmas and happy holidays, Cleveland.
Wishing you all the best.
From your hard-working, straight-talking, do-it-right friends
at WyattWorks.com.
Wish there was a place to find good, clean, family-safe entertainment? A place with no violence or profanity? Where you can let the kids roam free? That place is the all-new GodTube.com. Watch inspirational videos that'll challenge and motivate. Catch the latest music videos from Christian artists like Jeremy Camp, Hillsong, and Chris Tomlin. And share a laugh with clean comedians like Tim Hawkins, Anita Renfro, and more. All free 24/7 right in your own home at the simple touch of a button. Visit the new GodTube.com. That's GodTube.com.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program after 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
Well, welcome back. I got a couple emails during the show that was really funny. People asking what book it was, and you know what? I got so many of them. I actually forgot. I forgot the title of the book. I know it's in the book, but so I will. I'll go bring it with me next week to the radio program and give the name of the book out. And it's been around for a long time. It was actually. There are 3 or 4 versions of that same book, and this was the last one that they had updated. So they changed the name a couple times, or a little bit, but very little. But yeah, it's pretty interesting. If you do a Google search on stocks, man, you get a bunch of garbage. I can't imagine having to work through all that stuff. So I know there's stuff for people that really like it. Somebody that's been there, standing right where you're at. I don't know. I've probably purchased well over 1,000 books during my career, and I read them all. And eventually, you begin to realize there's a theme that starts to come up, and those people that have done very well have done things similarly, whether it's through funds or individual stocks. There are a lot of similarities in the procedures or whatever your methodology is to selecting investment. And it's not when you read all that stuff and then you step back and you thinking about it, and certain ideas stand out. And I can make this really simple for you. In the long run, the things that matter the most are sales growth, which kind of makes sense, right? And profitability. In those, by the way, the size of the company has a lot to do with its performance, but that's because most of the bigger funds are market cap weighted. That's a really complicated discussion. Don't want to go there, but at least not today. But size, speed, and profitability are generally the 3 most important factors if you're looking at 5 and 10 year periods of holding on to stocks. And by the way, if you are thinking about investing in stocks, you should not be looking at less than 5 years. 5 years is a minimum. And when people start telling you, or when you've heard this on almost every financial show that's ever been successful on television, stocks are for the long run. Well, the long run is not 6 to 9 months. That's what a lot of the public thinks long run is. All that the other. No, that's a good way to get your butt kicked consistently your entire investment life, and I've seen that a million times. Well, maybe not a million, but at least a couple 100,000. You have to be looking out really long, and if you want a really good book on this, it's Joel Greenblatt. Read any of his books. Actually, they're really good. He was a hedge fund manager. Now he's I think he might have retired, but Columbia University. He was after he got done making his phenomenal returns in the hedge fund that he managed, he went and then became a professor. And I think he went to it was the same college that Warren Buffett went to because he didn't get into Harvard. And anyway, I'll have to go read back up on that. But he went back there where one of Buffett's professors Ben Graham in college is the one that really got him interested in investing and doing the deep dive work that you need to do to kind of know the company. Buffett took his material and really advanced it. There was another guy that was very influential on Warren Buffett's strategies. Today, it'd be really difficult to execute those strategies. But they all have a lot of things in common. The common theme that comes up in stock investing is profitability. If you the companies that are the most profitable and find a way of increasing those profits over the long run have a tendency to do very well. In the short run, they will drive you crazy. That's not. I'm laughing about it because it's better than crying. When you are trying this stuff, that's one of the reasons I like a pool of securities. I like to know that there's a method behind the madness, and it goes beyond just size and speed. Although, if I had to choose size and speed, if they only gave me two, that would be it, because that's the S&P 500, and that is really tough to beat. The growth fund, the S&P 1,000 growth fund, beating the S&P 500 past 5, 10, 15, 20 years. There's a reason for that. If you're looking to increase returns, you probably want to copy those models. And there are a lot of funds out there that do it. Again, I'm still 2 or 3 months off from being able to offer you an individual model for doing individual stocks. Believe me, as soon as I get everything pulled together, I'll be talking about it. And like the Brave one, I've already gone first. I think I have some really close investors. They're extremely sophisticated. Sophisticated investing just means you've been around one and you've seen a lot, and you pay attention. So it's nothing earth shattering for you people that do that. It's fun to talk to because I like to have groups like that to bounce ideas off of, and they'll generally tell you really quickly whether they think you're a nut or not, or if that idea is any good. But anyway, so why do I spend so much time talking about stocks? Well, because it's very difficult to keep up with inflation and taxes and still be able to take out an income that's going to allow you to make it through your retirement years without much trouble. I know people in their 30s, 20s, 30s, you guys should be 100% growth as far as I'm concerned. That means you're going to have more of your money in stocks, and most of those stocks should be in growth-oriented models, those things that are using those factors that we were talking about, size, speed, profitability. Is it magic? No. It's just good investing. And sometimes it takes a long time for it to pan out, but eventually, keep doing it, it does. What's a good rate of return? I don't know if you're using a balanced account of a 70-30 split, 70% stock, 30% bonds. You should be able to average somewhere north of 10% a year. And but that's a lot of work. You're going to put up with a lot of volatility, like a lot of volatility, a little bit. And but that's doable. I mean, I don't talk to a lot of people. They hear 10% a year, and they see all those stupid internet ads promising to make you rich on $5,000, or I'm trading once a day. And yeah, if it sounds too good to be true, it is. And I've had years where portfolios nearly doubled. And by the way, you're going to need those years to be able to have a long-term average that's greater than 10% a year. You're going to have a couple of years where your returns, you feel like you can do no wrong. You also got to get ready for the other side. It's like everything you touch just goes to crap. or those investments that you held on to for so long, they've backtracked. And that's the hardest part of investing. When I was younger, I was reading about Peter Lynch and Warren Buffett. Those are all the stars of or a couple of the stars of my young age. And all the other stars that have been around, they were pretty open about it. They wanted you to know that was not magic doesn't exist. That you can buy stocks that are going up real fast, but if you're not careful, you do that, they'll come down super fast too, and may never recover. So when you're just looking at speed and speed alone, that's a really difficult way to manage your money, particularly when you get close to retirement age. You get close to retirement age, you're normally looking for stuff that's going to protect you somewhat on the downside. And by the way, you're going to give up potential returns for safety. It's a trade-off. That's one of the reasons I like the fixed index annuities. They some of the highest guaranteed rate are available using those types of products. That's why I started talking about them a couple of years ago, and still continue. And I'm sure I will throughout the rest of my career, because it gives you a base. So here's the base. Here's what we're willing to guarantee, despite whatever happens in the stock market. And will it keep up with the stock market? Probably not, because the stock market, if you look at it for a long enough period, or you're very selective over the period that you're looking at, it takes a run. It runs, and it moves a lot. You just don't know exactly when and when it's going to end. And so be prepared. That'll go a long way. Just hearing what I'm saying will go a long way to help you when you're looking at how should I invest this money. And if you don't feel like you're very sophisticated and you don't want to read a whole lot, and that's one of the reasons I have a job. I'll explain everything that we're doing to you if you wanted to come out and talk about forming an investment strategy to supplement your retirement income. And I don't hide anything. You can ask me anything you want, and you can ask my clients. I can give you the phone numbers of people to call. I don't cover anything up. No sugarcoating, because it's tough. It's hard. To be a good investor, you've got to be extremely psychologically disciplined. I mean, incredibly so. Warren Buffett will tell you, read anything that he has to say about it. It's not about your IQ. It's about how how mentally tough you are. Because the market's going to challenge you. It challenges everybody. The very best of investors have had huge swings in their portfolios. You look at the portfolios that are doing the best today. They have the highest range of prices. In other words, they're fluctuating a lot more than the ones that aren't producing quite as much. So there's that trade-off there. And it's difficult. I feel like they should probably start teaching this, and I know it's my entire career, in about the 7th grade. Why 7th grade? Well, you're just beginning to learn some of the math that you need to know. Your minds are young. You learn super fast. And by the time you're in 10th grade, you had 2 classes in this, we'd be building a whole bunch of Warren Buffetts, and that's really good for the economy. Really good for the future of Social Security. We're going to use to have people that wouldn't be nearly as dependent on it. And it wouldn't be as upsetting as it is when these guys threaten to cut Social Security. I don't know what these guys are thinking, though. That's a great way not to get reelected. There are the fastest growing segment of the population, 60 and over, you knucklehead. You should not be threatening Social Security. It's just dumb. And not only do those people need it the most, but it's the biggest pool of voters. They're not going to be there in another 20 or 30 years, but that's a long time from now. we've got to get from here to there. And I just think that's kind of wild. Anyway, that's supporting anything like that obviously doesn't want to get reelected. And if you wanted to run against somebody who was promoting that, that's what I would make that key of my campaign. Hey, we're not only are we not going to cut Social Security, we're going to keep the cost of living increases in there, and we're looking at ways to increase it. That's what I would run on. But knowing that is an incredibly difficult job, probably not going to be able to convince all the other members of Congress to go along with it, but at least you can say you tried. It's kind of funny. But so anyway, coming up, everybody wants to know, what do you think the market's going to do? Well, I think it'll go higher. Actually, valuation on the stock market it's not grossly overpriced. A couple of years ago, it was the head of where it should have been, and by a fairly significant margin. And then it had a drop. The drop was over 25%. Well, now it's actually above that level that it was back in. This was in the fourth quarter of 2021. So it is the fourth quarter of 2024, but it's up about 22% from that point, and that's okay. Like I said, is it overpriced? Yeah. Is it like it was in the year 2000? Nope. Yeah, it's not as overvalued as it was then. And when we come back, these commercial messages, I'll tell you what I think is a pretty good strategy for the current environment. This is Bill Bullington. I'm right here on 1420 every weekend, 11 to noon. I'll be back right after these messages.
You've seen the commercials. You know how beautiful the island is and how great the locals are. Now it's time to experience the beauty of Ireland in the spring, when even the rock-hewn Burren region comes alive with color. As the wildflowers cover the terrain, you'll take in the scenic views that National Geographic calls one of the most beautiful spots in the world. Of course, the cliffs of Moher and castles. Great music and fun with the locals. You'll stay in first-class hotels, including a resort that Condé Nast considers in the top 10 in all of Europe. Galway, considered one of the coolest cities in Europe. The history of Dublin, the best seafood in the world in Kinsale. Go to morethanatour.online for more information. Leave in the evening on the only direct flight from Cleveland to Europe and arrive in Dublin for your morning scone. Give the gift of more than a tour this year. Give them an experience of a lifetime. morethanatour.online.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
Well, welcome back. Funny, I was looking for that book that I'd mentioned. I left it at home, and I have it right next to my on my nightstand. Actually, I'll refer to it because it's so big and it's so boring. But if you have trouble sleeping, it makes a really good. It's a good tool to use. Anyway, that's basically how I got through the book. I would read. I'd probably get like 5 or 6 pages, and then get so sleepy I could go to sleep. And so I guess I should be paying them for more than just the stock market knowledge. But I'll have to go look at it. I thought, well, I'll just go to Amazon and look it up. And I put I've put 4 or 5 different ways of trying to find it, and that is hilarious. It is not there. And I might have a really valuable. It's not going to be all that valuable. I think it was close to $100 back when I bought it a long, long, long time ago. And that's one of the things. If you buy books that are really good on the stock market, then you end up paying a lot of money for them. I paid $70 for it a long time ago. And you don't want trading strategies. Trading strategies, it is so difficult. Unless you can sit in front of that computer, and even if you can't sit in front of the computer all day, or if you could write the algorithm that'll do whatever you want them to do, it is still incredibly difficult. I'm talking about winning the lottery, difficult, or the Browns having an undefeated season, difficult. That's the level of difficulty that you face when you're trying to make money by short-term trading. Not that nobody ever has. Some people have, but people win the lottery too. And there's an unbelievable amount of luck involved in trying to do that. And you got to know how to put yourself in a position to get lucky. There are certain things that you need to do. Kind of like if you want to win the lottery, you got to buy a ticket. No, winning the lottery is probably harder. It is a lot. But just because you could be doing all the right things and the market's just not cooperating, even though you're doing all the right things. That's another thing. The market will turn around and all of a sudden, boom. I think I still look at these scans every day just because I got such a big, it's such a habit of doing it. And the scan that I'm looking at, see here, pull it up for you. So there's this thing called relative strength. And relative strength measures how stocks are doing relative to the rest of the stocks in the stock market. Now, I'm using all, like the Russell 3000, because it makes up about 99% of the stock market of tradable stock in the United States. The next thing, so it's got to be in part of that group. Then it's got to be in the top 80% for performance over the last 6 months. So I want these things moving right now. Also, today, or the day that I run the scan, it's making a new 30-day high. Now, there are only 5 trading days in a week. So 30 days, we're measuring the trading days, about 6 weeks. Okay. And the price, I want to be above $5 because when you get below $5, I should have that at 10 actually, but at 5. And then I look at the price to sales ratio. That's a evaluation tool, and I'm not screening on it. It's just present there. Okay. The next seminar we do, it'll be in the first quarter of the year. I'll bring all this out and show it to you. It helps because you can see names of stocks that you might recognize. When I'm going down to the list right now, I don't really see a I know who Sound Financial is, but that's the bank. Not sure how many people know. Oh, Apple. Apple came up on the scan. Does that mean you should run out and buy Apple? Well, nope. It just means that if you're going to trade Apple, that it's showing all the signals and it's come up on the list. And I will tell you, trying to trade a stock as big as Apple is not easy. It'll get stopped out quite often. But right now it's on the list. Price to sales ratio is 8.94. That's pretty high. That's extremely high. It's about 2.5 times higher than the average stock. Take a look across all the stocks. And you might say, well, Apple's worth 2.5 times because I love Apple. And I like Apple too. It's actually the top positions in a couple of the funds that I hold. But as far as an individual stock that you're going to trade, I don't know. With all my experience, I don't know if it's will make that much money doing that. And Apple, I don't see anything else that I've seen that the average person won't recognize. So leave that alone. One of the things I think is tough with valuations being where they are, and I like to use the price to sales ratio. Most people like to use the price to earnings ratio. You're going to use price to earnings ratio, you need to look into each and every company that comes up on the scan that you like to make sure that that they're not doing something to manipulate earnings, which they'll do. Just what kind of level is that? And I could do an entire series on which profitability numbers you want to look at. The reason I like price to sales ratio, it's really difficult for firms to manipulate their sales data. And if they do manipulate the sales data, they're going to cut. That's much easier to catch than the profit margins or profits or the earnings per share. That can be manipulated a lot. And we'll go into more detail about that. I am going to schedule a seminar for this spring. We'll start to talk about it as soon as I make the date. Come out there, ask any kind of questions you want. And actually, over the years, I got way more. I furthered my education much further by fielding questions than just about anything else. And so sitting down and reading a finance book, I don't know how many that brutal. Yeah, and you don't retain a whole ton. You can pass the test. Heck, I held a Series 3. That's commodities license. A 7, which is a huge test. That's the stockbroker's regular license. A 9 and 10, those were both at the time supervisory license. 24, that's a supervisory license. A 63 and a 65. And those are all, the shortest test on that list was 3.5 hours. That was the shortest. Yeah, I think the longest was the one of the principal exams. But anyway, there's a lot of stuff. You don't really have to know all that stuff. You're trying to learn more about strategies. It's a little easier, I think, than it is to do individual stocks. Individual stocks, and there's just so many differences in the companies, their prices, and it's a lot. So, and I like talking that it's actually a hobby. That's really what it's become, because it's incredibly difficult to beat the models that I'm using. I mean, it's incredibly difficult. So the only reason to do individual stocks is that you really like stocks and you're bored. You're probably retired. If you are married or you're still working, not so sure I would recommend that. It takes so much time. You're not going to have time. Believe me. And if you don't put the time in, the results can be catastrophic. So you got to have the time. And I didn't really have the time. I just made the time. And that's not easy. Very, very difficult. So anyway, having said that, it's one of the reasons that I put in an application. I was looking at one of my vendors, one of the custodians I use, and they have a program that's got some world-class portfolio managers there doing all the heavy lifting. And they've been made available to my firm and my clients. It's relatively new. I'm still learning about the program, and there's a lot of paperwork. You have to go through a vetting process, and I'm pretty sure we're going to make it. It looks good so far, and I think that's going to be good. I actually started to, I resubscribed to this thing called a Bloomberg device, and it's really expensive, and it helps you. You can build your own models and test them, and you have extremely accurate data. That's another thing. There are a lot of data vendors out there that software that you can invest in for investing. Data, to get really good data, show prices, financial statements, volume of shares traded on which days, all that information. If you want high quality information, it's going to be extremely expensive. And I'm going to tell you that the average person is not going to spend the money that they need to be able to do that with a high degree of confidence in your model. I mean, there are a whole bunch of people who are super confident in their models going to get butt kicked. Oh, that was bad data. But it's rough. You know, it's a rough world out there. And one of the things about you don't want to be doing that in retirement. I mean, in retirement, you really want to slow down, have stuff done for you, make sure it's being explained very well. And I've only got about 30 seconds here. I have to take another quick commercial break. So I'll just plug myself again. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. And the website is bullingtoncapital.com. If you wanted to reach out to me, the email is bill@bullingtoncapital.com. And I will be back right after these commercial messages.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.